Hello, everyone. I just finished a note taking session, and I'm going to screenshot my notes so that you can see this. But all these notes right here, are all of my noodling on the drive down from the facility back to Atlanta. And the title of my notes is Why Bitcoin Will Moon August 4th, 2022. Let's talk about that. I want to break this down because this is really interesting stuff that was going through my mind on this drive. So let's start at the beginning. Let's talk about inflation. What is inflation? Inflation is merely an increase in the money supply, right? And the problem is that we now have more than just money supply that people usually think of, which is a poor narrative. When people think of money supply, they think of dollars, they think of cash. That's wrong. Assets are part of the money supply. Your real estate is part of money supply. Your bond is part of money supply. The stock you own is part of the money supply. All of the abstractions and derivatives are all part of money supply. And so one of the biggest problems with the abstractions of money is that it creates inflation. Anyway, so inflation is an increase in the overall money supply. The problem is that what inflation should be, or rather the increase of money, let me put it this way, not inflation, but rather any increase in money in the system should be a function of economic value being created. That's how money should work. We'll never get there because we're too deep in the weeds where we are now with this dysfunctional fractional reserve lending and amazing ability to apothecate multiple abstractions of a core entity or value. But anyway, and so money in the world should be, any increase of the money in the world should be a function of economic value being created, right? If Apple company creates a brand new novel phone that's never been seen before, that is new economic value that is now increasing the lives or increasing the betterment of the lives of people and their consumers. That is true economic value, true economic outcome into the system, into the world, and money should increase as a function of that, right? But right now we don't have that. We won't have that. We have something called inflation. Now, inflation can be seen and is affixed to many different variables. And these many different variables, there's almost too many. There's actually an infinite amount of variables. But whenever you hear the word inflation, you should have a really keen ear about what they're talking about, because when you ever hear the word inflation on like the news, the mainstream media, what they're really talking about is just nonsense. It's just supporting some semblance of a narrative, because inflation can increase in a multiplicity of ways. I'll give you two examples. We can have inflation due to industry constraints. One common way of measuring inflation is the CPI, right? The Consumer Price Index. I think the Consumer Price Index right now is at all-time high since 1981. I think it's like at 15% or something like that. And so we can have a CPI, a Consumer Price Index inflation of 15% due to industry. That's the key word. Due to industry constraints. Industry constraints. So, for example, Ukraine is one of the biggest providers of like fertilizer and stuff like this, right? And so I don't know the numbers, let's just say they're 40% of the world's supply of fertilizer. Now, because of war, this is an industry constraint now. That 40% of the world's supply of fertilizer now essentially drops to zero. What happens to the world? Well, the world has to respond, right? Increases in supply chain prices, inventorying prices, shipping prices, manufacturing prices, design prices, obviously the manufacturing of the products and services that leverage fertilizer will increase. So you have inflation in the economies due to a industry constraint. Or you can have inflation due to just the Fed printing money, right? And so you can have a CPI of 15% due to industry constraints, but you can also have inflation in CPI 15% due to the fact that the Fed's just printing money and doing stimulus checks and paying everybody, thousands of dollars a month to do nothing, right? And so there's a difference between these two types of inflation, but the net result in measurement is still 15% CPI. And so you have to ask yourself the question, really, which CPI of 15% would you prefer? An industry forced function or the Fed printing money? And the short answer is obviously the first is what you'd rather have, because the system will adjust to an industry constraint. And actually, sometimes the most novel and new inventions come out of industry constraints. There's no more fertilizer. Well, we got to figure something out. New products are built. So that's actually good. That's maybe a good inflation of sorts. The bad inflation that we never want is just banks running rampant, printing money by creating loans. And then having those loans, which is a debt, become actually an asset, because they can sell that loan to another bank, and another bank can create another sale on that asset that was originally a debt. So we now live in a world where debt can become an asset leverageable. It's crazy, right? And so Bitcoin, now let's get into all this. Bitcoin rose as a function of all of this dysfunction of industry money. Inflation in assets, not only the money being printed, but obviously 2008, we had the real estate bubble, asset inflation as well, right? So Bitcoin rose as a response to the 2008, 2009 financial crisis. And essentially, as I was thinking about this, is that Bitcoin has ridden inflation, monetary inflation, not necessarily asset inflation, and not necessarily industry constraint inflation. Bitcoin has ridden monetary inflation all the way from 2009 all the way up to today in 2022. And I was thinking about this, and I was thinking about if it's riding inflation, then what were some of the economic policies and that occurred that created pullback in Bitcoin from 2009 to 2022? Well, interestingly enough, I've kind of sort of knew that there was an inverse correlation to Fed interest rate hikes and Bitcoin. And so when I got home, I opened up the Googles and I typed in Fed interest rate hikes and cuts over the years, and then I matched that to the Bitcoin price. And guess what I found, guys? I found that my hypothesis was true, which is I'm so glad I wrote all these notes down, because now I can tell you all about it. Check this out, guys. There is an inverse correlation of Fed interest rate changes to Bitcoin, which I lived through, but it's nice to see the data behind. Well, actually, I think I'll just show you the data, right? Where is it? All right. There we go. Boop. Right. So here's the Fed interest rate hikes. You can see all this stuff here. And then I was looking at the Bitcoin price and how that matched all of it. But so I have all the data. But let me tell you what you need to know. Oops, not that. Here's what you need to know. In December 12th, 2013, December 12 and 13 of 2017. This was after the huge bull run up. What do we have? We had a major increase rate hike, 25 basis points at 1.25 to 1.5%, 2x the previous. And what we saw that Bitcoin went from $19,000 in December 12, 2017 to essentially $6,000 as a response to the interest rate hike. Then, and it continues, right? So, and it continues this downward spiral. Now, if we move ahead to the future, let's go to January 2019. So, what do we see in 2019? In 2019, we see massive rate cuts. Bitcoin only go up, right? And so in 2019, rate cuts they cut the rates. Bitcoin jumps up bigly. Then in March 2020, what happens? Massive rate cuts. 100 basis points was cut in March 2020. Bitcoin essentially goes from $5,000 in March 2020 to a year later, 2021, from $5,000 to $60,000 essentially because of this massive rate hike. So what do we see now? We move into 2022 through March through July, right? It's August now. March through July, we've seen rate hikes, right? Bitcoin's going back down. Now, what we actually have, and this was the big noodle that I was thinking about, guys, is that we have a convergence of two of the inflation inflections that help Bitcoin. Not only are we seeing industry constraints, supply chain constraints, right? Production constraints, material constraints, factories being blown up and food supplies suddenly burning down all at the same time, right? There's a lot of disruption to industry, okay? What else are we seeing? We are about to see the biggest amount of money printing that we have ever seen in history, and we have seen in just the last couple of years. So what do we have now? The Fed has been raising interest rates the last months of 2022. Bitcoin go down. The Fed's going to the Fed will have to lower interest rates. It has to happen. Period. Full stop. We know this because we're recession, moving maybe into depression. But we also know that we're going to be also printing extraordinary amounts of money. So remember, Bitcoin wins when we print lots of money. And Bitcoin can also win when there's economic industry constraints. And so how are we going to be printing all this money? Well, we're already printing lots of money, but there's going to be bailouts soon, right? There's been whispers, right, about that we might be bailing out Europe or bailing out Japan. So what are we going to be doing? Well, America's going to be printing money to buy up bonds to help other nations survive this America-induced recession. And so both these things, industry constraints and massive pumping of money into the system, we could see Bitcoin have an extraordinary moon. Yeah, we're talking above $100,000 coming up in the next big bull cycle.